Hello, everyone. Welcome to this week's weekly market view for Monday, the 4th of August, 2025 to Friday, the 8th of August, 2025. My name is Vishal. Let's get started. All right, let's kickstart with the Nifty analysis. And let's go ahead and start off with the monthly chart. So this is the month of August, and this is the monthly candle. So let's go ahead and plot the closest level of supply and demand. So the supply zone is in play, and the demand zone is currently far away from current market price, but we will still go ahead and mark it. So this is your closest demand zone, rally base rally. And currently price action is suggesting that we are slightly closer to the supply zone. Now we also need to keep in mind that there is also this rally base rally monthly demand zone, and that is where we are taking a little bit of a pause here. Whether the price is going to break this level or the price is going to bounce out of this level is something that we need to watch out for. Let's move on to the weekly chart. If you look at the weekly chart, on the weekly, we have this level of demand, rally base rally. And this is a level which is likely to hold. We have a lot of these candle wicks, and any break below this level will possibly indicate some kind of a selling pressure, and we are coming straight into a level of demand. So this is your weekly level of demand, and your weekly level of supply is sitting right here on the, you have this gap level over here. So this is your rally based drop. So we haven't yet tested this level, so we are reacting from probably a smaller time frame level at the moment right now. Let's move on to the daily chart. And if we move on to the daily chart, we do have levels of supply sitting right here. But what is more interesting is we have this rally based drop, and we also have this drop based drop from where we might see some kind of a potential reversal coming in the market. Now, what is interesting is that, and let me just draw the line in the sand here. So as you can clearly see from the charts, this is a very, very crucial area for the market, which has historically taken a lot of support in the past. So 24,460, or rather in whole number terms, 24,400, 450. These are going to be crucial levels for the market. This is where the support is. Any break of this level will probably induce more selling pressure. If you look at the supply side, there is no supply. There's only supply that is sitting right here, which is very, very far away from current market price, also preceding by a gap level. And we may have a smaller time frame supply zone sitting within this area. There's no close level of demand here. So it seems like market is likely to take a little bit of a support at these crucial levels and probably start inching again to the upside. It may move sideways, but it's going to be more like a sideways to a more bullish view in the short term to medium term. All right, let's move on to the next index. We are going to be looking at Nifty Bank. And let's look at the Nifty Bank with a slightly broader perspective first. So if you look at Bank Nifty, if we start from the monthly chart, we have this rally base rally, monthly level of demand, and price is now retracing back into this monthly level of demand. If we go into the weekly chart, there is no clear level of weekly demand on the chart, but this is that entire monthly level of demand. We do have a little bit of a gap level over here, and this may be a little bit more evident on the daily time frame. So let's move on to the daily chart now to see if we can find something interesting here. So on the daily chart, again, nothing is very, very clear, but we do have this drop base rally level of demand. It's not yet been tested. It has been tested wick to wick, but it hasn't been tested wick to the body of the base. So very, very similar structure to that of the Nifty. Nifty also has that that gap level. So it seems like price might take a little bit of a support at this level of demand and then probably start inching to the upside. Right now, the closest level of supply is right here, but this has already tested multiple times. So in the long run, if the price does take a little bit of support here and does give us a bounce, then it's more likely that markets will try and inch towards making a new high in Bank Nifty. All right, let's move on to the next index. We are going to be looking at the Sensex. So let's change this to BSC. And more or less, the levels on the Sensex are going to be quite similar to that of the Nifty. So let's analyze this. So again, Sensex monthly supply zone in play, but price is now within this monthly level of demand, very similar to the Nifty. It's gone a little bit more deeper. If we go on to the weekly chart, nothing clear, but then again, very similar level to that of the Nifty on the Sensex as well, rally base rally. And price is taking a little bit of a support at this level right now. We can clearly see. Let's move on to the daily chart. On the daily chart, we do not have any fresh level of demand. But again, price very similar to the Nifty is more or less taking support at this area over here. Okay, so this is going to be a very, very crucial area for the Sensex. In fact, for all the indices, taking into consideration where they are taking the support. And in case if price does take support here, then markets are more likely to move a little bit more to the upside, slightly more sideways with a bullish bias. If you look at the supply level, there's a clear level of supply here, but price is very, very far away. And this supply is also within that monthly level of supply. We do have these areas which are not yet, it's just barely tested on the Sensex chart, but not on the Nifty. And then you also have this rally based drop extreme supply zone. Okay. Now, one thing that everybody needs to keep in mind is that whenever we are looking at supply and demand zones on the indices, the supply zones are always going to be a little bit more less probability, because in the long run, the indices are designed to move to the upside, right? So shorting indices is always going to be a very, very aggressive and a low probability opportunity rather than going long on the indices. All right. So just keep that in mind. Let's move on to the next chart. We are going to be looking at the India VIX. Now, this is a very, very important chart. And I think every trader should be looking and following this chart, not only the people who are trading in options. But let's start off with the monthly chart. So this is the monthly chart of the VIX, and what generally I tend to do in the analysis of the VIX is I tend to ignore these VIX and only consider the candle bodies. Okay, and this is also because of the morning candle spike that comes in the India VIX, which does not give us the correct measure of how the price has actually moved. So I generally tend to ignore these VIX and only consider the candle bodies. But currently the VIX stands at 12.16%. It's slightly increased from the lows, and the area which is in play right now is this drop base rally. 10.83 to 9.81 was the level of demand. It has come here multiple amount of times, you can see here. And again, after coming into this level, it has also started to increase. Now, what does that mean for the Nifty index? So the India VIX and the Nifty, they are inversely correlated. So whenever the price comes into a level of demand and at the same time Nifty hits a level of supply, most likelihood, if the India VIX starts to rise, it creates a little bit of a panic in the market. And because of that, you will see a little bit of pressure on the indices. All right. So this is something to watch out for in the coming days, in the coming weeks, to see if the VIX increases in value. And if it does increase in value, most likelihood it's likely to go towards these areas, which is 13.32 to 14.55. And this is going to be a little bit interesting to see that once the India VIX hits these high values, what happens to the Nifty index, and or whether the Nifty index does come under some pressure. Let's look at another very interesting chart. We are going to be looking at the USD INR. So let's look at the USD INR. And let's look at it with a slightly longer term perspective. So let's start off with the monthly chart. And here you can see the monthly chart of the USD INR is indicating a strong move to the upside. Again, the USD INR and the Nifty are inversely correlated. So if this continues to move up, it might eventually put a little bit of a pressure on the Nifty. But as we can see, we are coming into a very strong resistance level over here on the USD INR. And it's most likely that price might take a little bit of a pause once it hits the 87.95 handle. Let's move on to the daily chart. So let's remove all the tools here. Yeah, so we do have this base rally level of demand. And then we have something to the left as well. So this is more or less a resistance level. And what we would expect price to do is price might do something like come into this area here and then start moving to the upside. Okay. At least that is what the charts are telling us. All right. So this is pretty much the analysis on the USD INR. Now to just wrap up the session quickly, let's look at a sector. And the idea here is that every week we'll probably analyze a sector with the perspective of supply and demand. And then obviously, if a particular sector is at demand or a particular sector is at supply, then it's more likely that all the stocks which are under that sector will also be most likely at a level of demand or at a supply level, and that helps the trader to time the market and participate in opportunities with a very, very high probability. All right. So the sector that I'm going to be discussing today, and it's one of the most popular sectors. So let's go and look at the Nifty IT sector. All right. So this is the Nifty IT sector. Let's start off with the monthly chart here. So on the monthly chart, we have this rally based drop. I'm going to mark it wick to wick. And the level of demand from where the prices are bouncing or might likely to bounce is this drop based rally. So somewhere we do see a little bit of a weakness on the Nifty IT sector. Now, what has happened here is we have this strong bearish candle. We can consider this as a pivot, which means in the short term, Nifty IT may not find it very, very easy to go beyond this supply zone. Let's move on to the weekly chart to just see this. Let's remove all these tools. So let's make the charts nice and clean. Yeah. So we do have a level of supply here. This is a reasonably decent level of supply. And just below all this price action, we have this level of demand where I think price has just tested this level. Yeah. And given a very, very strong bounce. So if there is any strong level of demand, there should be some level of demand over here and some level of supply here. So stocks like Infosys, TCS, and I mean all the IT stocks, right? Most likely coming to good levels of demand in the short term. But in case if the markets start to move to the upside, then we will also see those stocks again moving into key levels of supply. Now there should be something on the daily chart as well. So here we can see that we do have a gap level here, and I believe that today this gap level has been filled wick to wick, and that is the reason why we are seeing a little bit of a bounce coming in. But actually no clear level of demand yet on the stocks here. So probably a good idea will be to look at higher time frame levels such as monthly, weekly, and daily charts on stocks which are more specific to the IT sector. All right, so I hope you all enjoyed today's analysis, and we'll keep on making this as a regular feature from this week onwards. Looking forward to see you. And if you do like our channel, do like and hit the subscription button on the YouTube channel, and do become a subscriber to get more updates. Have a lovely week, everyone. Safe trading. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.